Recording in progress. Good morning, everyone. Welcome to the Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing today's speaker. I will be also coordinating the Q&A chat session at the end of this session. I want to congratulate all of you for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you are entitled to live a happier, healthier life by keeping more of what you earn and getting the taxman off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last 20 minutes, plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. To better understand what might be on your mind during the session, I might include some polling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. The topic for today's session is agents, consultants, and other professionals. 5 tips to minimize tax expense. And the tax expert for today's session is Kelly Coughlin. Kelly is a CPA, the chief executive of Everyday CPA, and founder of Tax Resolution Help Center. Kelly has been a CPA for over 20 years and has helped countless individuals and businesses remove, reduce, and resolve past, present, and future tax so they can live a happier, healthier life. Kelly says he loves seeing the relief his clients experience when they get the IRS off their backs. That being said, introducing Kelly Coughlin.
Hello, May. Thanks for the introduction. I hope everybody can hear me okay. Good on that, May?
Yes, I can hear you.
Perfect. Okay. Hello, my name is Kelly. I'm a CPA. And today I'm pinch hitting for Jared, who normally does this session. Uh, I'm using his presentation because it's so well designed and crafted, but I'm pretty familiar with the white collar issues that agents, consultants, and other professionals uh, face when in doing tax returns because I've done both of those returns. Um, we like to focus on white collar versus blue collar. White collar tends to have a much lower operating costs, expenses, and so they have some bigger challenges since their margins tend to be higher versus a trade business where you've got cost of materials or cost of gas in your trucker, those kind of things. I mean, white collar people, you kind of invested your money up front in your education and training and continuing education, and then you kind of leverage that over the remainder of your career. You've got operating costs, certainly employee costs, but they're different type of cost structure. They present slightly different issues and needs, and so that's kind of why we do this. I'm not Jared Anthony Smout. I am a CPA, so we have that in common. Um, First of all, let's talk about the tax structure of self-employed, and we're assuming that many of these white-collar workers are 1099 type self-employed people. That is, they get a 1099 from perhaps their insurance agency, from their real estate agency, maybe if they're a consultant, they don't get a 1099 from their client companies. Some of them might issue 1099s. I issue 1099s for some of the digital SEO type consultants that I use, so they get 1099s. But those are kind of the three markets I'm going to kind of think about in this talk: insurance agents, real estate agents, and digital and say consultants. That could be financial advisor types as well. You've got 15.3% of self-employment earnings. That's the first tranche of tax. That's a big number just before you pay the income tax. So that needs to be included in your kind of list of tax issues to discuss. Then you've got ordinary income tax in addition to self-employment tax. You can deduct part of that self-employment tax. Thank you very much. All right, you get to deduct that, but still, it's a pretty big tax. It's just the income tax alone and the self-employment tax can be a pretty big number. Let's say, 35 to 30% before you even, before you even grow a business. So it's a little. Of course, businesses you got sales tax in addition to this. You got to pay excise tax, property tax, a lot of tax. So the purpose of this presentation is to help you find ways to appropriately bring down your net earnings to avoid higher self-employment and income tax. Those two components are the cost drivers, the income and the self-employment. So fortunately, when you bring one down, you bring the other down. So it's like a double whammy. Not only $1,000 reduce your taxable income to reduce self-employment tax, 15%, plus the income tax. So that's the nice thing. So you've got startup costs. Some of these need to be spread out for a number of years. Some need to be through amortization, depreciation. The IRS is particularly keen on business formation in the first year. So I always think it's a good idea to incubate your business in the first year where you don't have a ton of initial costs. They're going to ask you and squeeze you a little bit to amortize or spread those costs out for a number of years. And what triggers that is that little box in there that says, is this your first year of business? Now, you can have the first year of your business being your first ideation year, the first year that you kind of start thinking about your business. Maybe you've done some market research. That would be your first year. That's how I would try to structure it. Then in your second year, you have more ongoing operational costs. So I'm not trying to do anything illegal or wrong here. Jared had appropriately reduced your taxes and income. But be smart about that. Do your upfront costs in year one where the amortizable amount or depreciated amount is a smaller number that gets spread out because you, of course, would like to recognize it all in that first year. Office costs, obviously you've got rent, you've got utility bills, you've got internet, phone bills, office supplies, printing costs, website costs, software subscription. Keep in mind that some of these are going to be mixed use, mixed as in personal and business. So internet, yeah, you've got, maybe you're running out of your home, you got internet, you got a cell phone. I like the phrase pigs are fed, hogs are slaughtered. Um,
Recording in progress.
don't be um, too aggressive with your internet and phone bill if there's personal use involved. Don't say it's 100% business for cell phone when it's clearly you use it for personal. Do a reasonable allocation. It could be a high allocation if you're like me. I don't have a ton of personal calls. I use my phone for business. Same thing with internet. Yeah, I just read at night, but most of the costs is related to business. So I do like 90% internet because that's what I use. Same thing with like office supplies, Amazon purchases. If you haven't done a really good job keeping track of Amazon that you buy, just do a reasonable allocation and document it in your file that you save. And if you ever get challenged on it, you say, well, let's say Amazon generally I buy my office supplies and I buy personal, so I usually 50%. Reasonable allocation. If it gets challenged, then the IRS will come back and say, well, we think it should have been 25%, 30%. Now, if it's a $10,000 Amazon bill, one-time purchase, and you don't have a receipt for it that shows it's a business, you're probably going to get whacked on that if they challenge it. So the bigger the expense, the more detailed you want. A reasonable substantiation would be the original, the copy of the receipt that shows that it's a business purchase. That covers that part of it. You got software subscription. Don't forget those things. Those annoying, pesky subscriptions that hit every month. And you look at it and think, man, I got to cancel that thing. Well, those things add up. And let's say it's 5 of them a month for $20. That's only $1,200 a year. That's a decent expense. You go back to the self-employment tax. It saves money on self-employment tax. It saves money on taxable income. Seminars, webinars, conferences. I like to structure my education, research, etc., in areas that I can also get a personal benefit from. I'm in Minnesota, for instance, and then I like to do my education stuff down in let's say, Florida in February. Not trying to mislead or deceive anybody, but I intentionally structure it so that I can also get the personal enjoyment or fulfillment out of it. There's nothing that says that you can't enjoy your work, and frankly, I do enjoy my work, and partly because I'm smart about it. I don't go to the Yukon Territory in January to attend a seminar, right? I go advertising, client service costs. Clearly, you've got all your industry conferences set up. Travel expenses. If you take the kids, family, then do a reasonable allocation of that. Gifts used for your business. I don't like this category of gifts. I'm sure most of you are much kinder and gentler than I am. So give gifts to your clients just out of the goodness of your heart. Same thing with charitable contributions. When I contribute, my business contributes something to a fundraiser, let's say it's a room race or an auction or something. Yes, I do it because I want to support the cause, but I do it kind of mostly to build goodwill to get business. So those kind of expenses I put under business development, advertising, marketing. That's the real reason I do that. Other expenses, you've got credit card processing fees, other bank fees, tax returns, financial software, portion of your housing costs. That's the excuse portion that we talked about before. Mileage with the vehicle, and let's talk about vehicle costs. Vehicles in this age of the shared economy, where people have expensive assets that they own. It could be a home, it could be a boat, it could be a car. Technology and culture have enabled us to take those expensive assets and use them for business purposes. to generate revenue and profits. That's kind of the nature of the shared economy. So we share a vehicle, share a home, share a vehicle in Uber and Lyft, share a home in what's that called, Airbnb, uh, similar things with boats, I believe. So in those things, you want to be smart about how you use those assets, um, especially in terms of depreciation. There are great, you generally want to use them for over 50% of their total use. So you want to meet that threshold. And then you have different options on how you depreciate. And mileage method is a great one that you can just keep doing that forever. I've got a car that's got 225,000 miles on it. Just use depreciation method. Whereas if you use other depreciation methods, you're going to depreciate it in 2 to 5 years generally. Now you can still depreciate, or you can still write off the cost of fuel, etc. But be smart about how you use your shared economy assets, your home and your vehicle, and any other mixed-use shared asset that you have. When I talked about mixed-use expenses, that's an allocation among personal and business. This other concept is mixed-use assets, shared assets, and how you use those. Those are two subtle differences in mixed-use expenses and assets. Keep that in mind. Here's Jared's rule of the day, which I think is a great rule. Jared, I'm going to listening at some point so you feel better. I'm going to steal this from far away. If you spend money to make money, it is most likely a deductible expense. Even if it was a dumb expense, I can't count the number of dumb expenses I made in my business. I'm probably doing one today. I'm looking at hiring a different digital marketing person because I'm frustrated on how I get my branding and my message out there. So there's everybody wants to get into that space. I'd say that there's probably 10% that are really, really good at it. I've not found that 10% yet, and the 90% that I have used, I just haven't been happy with it. So those were, I spent the money, I deducted it, it's a dumb expense, I wish I had done it. IRS doesn't get in the business of telling you what's a smart expense or whether you should or shouldn't have done this. That's up to you and your owners and board or whomever, right? Make too many dumb decisions. Somebody will fire you, not your spouse, because they want you to spend your own family money to grow the business. But the IRS can't. The IRS is simply looking at, was it a legitimate business purpose? Not a smart one, a legitimate business purpose. So, as Jared said, if you spent the money to make money, that makes it pretty much a legitimate business purpose. Just make sure the intention was to make money. And then his idea is to keep accurate records, use software to make it easy. Yeah, you can use software. QuickBooks is the leader. Full disclosure, I do some more into it. We won't QuickBooks and TurboTax, so QuickBooks is great software. Software can also be, I'm a big fan of early stage businesses just using Excel, download your transactions from your bank, make sure you have electronic banking, pay with debit cards or credit cards if you have an electronic footprint on where the money was spent versus checks that don't need much of a footprint. It's hard to figure out. It's a check number 107 for $1,000. If you didn't keep a good register, or even if you didn't keep a good register, you have to get that in your record. It's a little more awkward to do, but you can do debit card. That's a good thing to do. Obviously, it's good to have a good accounting system. It's probably the best one out there, fairly inexpensive. I don't think you need to get it too early. I see some get it in their first year or two. I don't think that's necessary. I think you can set up good electronic banking, download it, get Excel, set up pivot tables, and you can actually do that before you charge your fee, but you can charge it for $300, and we can help you get your Excel pivot table cleaned up and ready to go, so that at least in the first year or two, you've got some good financial reporting. If you want to do that once a quarter, you can. If you want to do it once a year, it doesn't really help manage your business, but you probably have a good idea of where you're spending your money in your business and how much you're making. So current monthly financials may not be required to use your bank for that, but it wouldn't be bad to every 6 months get a status update on where you are with profitability, so you kind of have a good shot at where you're going. At a minimum, you want to download your transactions, put it into Excel, assuming you don't have QuickBooks. Put it in, get it into Excel, get the data in there, do some cleanup work on it, do a pivot table with your revenues and all your expense categories, and then you have a good record of that can be presented to your accountant if you're hiring somebody to do your tax return, or that you can use to input your schedule onto your schedules. That's my tip on that. Any questions? That's it for me. Dave, do you have any questions, or is it a little too early to get going on questions?
We actually have one question from one of our viewers. This is from Jake. He is asking, can I deduct the cost of my cell phone and internet?
Well, Jake, good question. That would be called a mixed use expense, not asset, but expense. And yes, you certainly can. In this age, um, cell phones and internet are almost, without exception, required expenses. So yes, you can. Then it gets down to how much of your cell phone and internet expense can you deduct. So Jake, if you've got 4 kids, teenage kids, I say teenage girls because I had 4 teenage girls. Your company was paying a shared plan with 4 teenage girls using it for whatever. My kids were not using TikTok, unfortunately that wasn't around. But I had one big plan that was let's say it was $400 a month. It was a fairly big number. The rates had come down. If I had taken 100% of that and ran that through my business, that would not be considered a fair and reasonable allocation. If I were a single guy and all I did was work and didn't have much of the social life, 100% might not be a fair allocation, but 95% might be a fair allocation. If that's what you do is work and you text your friends every now and then, meet up, that kind of thing. But even if 100% was in there, it becomes a de minimis amount. I just think it's a good idea to do a allocation. It shows that you made an attempt to be fair and reasonable about it. Back to the figures that hogs are slaughtered. Yeah, you won't get slaughtered over 100% allocation of the cell phone, but it's just don't give them any reason to start sniffing around. If you see that you did that, and they say, "Oh, this guy's being fair and reasonable." So that would be my answer to that. Anything else, Nate?
Um,
Real hard, tough question.
that's it for now. That's what we have. One question. Anything else that you want to add?
No, no. We can help you. Everyday CPA or Tax Resolution Help Center. Um, give Jared a call, or me a call, or whomever. We look forward to helping. We're here all 4 seasons. Unlike most tax preparation firms who are just around tax season, we're around all 4 seasons.
All
That's
right.
it.
Well, thank you for answering that, Kelly. Okay. So, well, that covers our questions, and that's it for today's session. I want to thank you for attending. Our commitment is to help you reduce your taxes and increase your wealth. We do this with the TriTax method of DIY, do it yourself, DIT, do it together, DIA, do it all. Three methods, one solution. Reduce stress from no IRS or state tax debt and happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. Since it is now tax season, we have many sessions to help you to do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check out our website at taxresolutionhelpcenter.com and please join as a member for today for $19.95 per month. Thank you for all attending.